Hey, rich friends, it's your girl Cha Cha reporting live from the Money Mantra, and we're back with another Forex education video. The purpose of this channel is to help as many people as possible become independent and profitable traders. So if that's something that you're interested in, make sure that you do subscribe to the channel. If you get to the end of this video and you find that it's helpful, give me a thumbs up, leave me a comment to let me know what you learned, and more importantly, share this video with another trader. You also have the option to register for personal mentorship or follow me on TradingView, and the information is down below in my description box. So in today's video, we're going to be talking about how to look at the market with more clear eyes. Outside of all the indicators, outside of the confirmations, it's just, again, getting back to the basics, which is what we've been doing in our last few videos. And we're going to talk about price action basics, because once you understand these things or once you see these things, you can make those small adjustments in your trading and hopefully walk away more profitable. So again, before we get started, the first thing we are going to do is we're going to remove our indicators off of the chart. We're just going to hide them, and we're going to, I don't need pivots on right now either. We're going to hide them, and we're going to look at the candles themselves. Because once you see some stuff, you literally cannot unsee it. So as always, we have to be able to identify a trend. And some markets will be more clear than others. So if you actually find yourself in a market where things are just too choppy, the shape of the market, the colors of the candles, all those things are not aligning with the indicators, it's really okay to switch pairs instead of wrecking your brain trying to make it work. So I'll show you guys what I mean by that. So Euro JPY, we're just going to look at that for a second, and we're going to put it on the 4-hour time frame. Now, we can look at this market, and somebody in the chat, right, let me know what this market is doing. Is it going up? Is it going down? Is it ranging or consolidating? And how do you know, right? Just drop what you think is doing in the chat and one reason why you would say that. Now, this market is clearly consolidated. So this would be considered a choppy market because it is moving sideways. Yep, exactly. It's moving sideways shape, and it has no clear direction. So if you come, yep, no new highs and no new lows. So if you come into the market at this time and you see something like this, you are not obligated to trade in this market. However, let's just say you go through all of your pairs and they're all doing the same thing, and you still feel the urge to trade outside of going into your demo account. You can just focus on price action only when it comes to consolidating markets, right? Price action only. And this is what I mean by that. So I'm just going to back this up, right? And I'm just going to say, let's back it up here. And let's focus on, wait, I'm going to back it up a little bit more. And let's look at the price action. And of course, we're going to talk about supply and demand, because no matter what type of market you're in, whether it's a trending up, whether it's trending down, if you focus on supply and demand, you will still be able to be profitable in a choppy market. Now, again, we're doing this without indicators. We're simply looking at price action. So if we come into the market at this time, we can see that it's pretty choppy. We can see that there haven't been any new highs. There haven't been any new lows broken. And the market just tends to be doing the same thing. Now, the first thing you can do when you see a choppy market is look for, is the market closer to an area of supply or is it closer to an area of demand? So just to refresh your memory on this concept and way of looking at the market, the supply will be found at the top. So this is similar to what we call resistance when we're trading. And what you'll notice in the supply zone is the market will come into the area and it literally is having a hard time getting higher than that, right? If you guys can see that, drop a 7 in the chat. And we don't have to scroll back any further, but we can also see, even though this was over a long period of time, right? It was, because this is the 4-hour chart. So for a long period of time, every time the market came back into that area, it pushed back down, making this a strong supply area. So we get the same thing over here. And when it's happening at the bottom, right, this is called demand, right? So this is similar to support and resistance, except it's called supply and demand. So in a choppy market, you can use this to your advantage, right? Because if you know that the market is going to be ranging, right? Because you can literally see it. And we haven't added our indicators back yet, but you can see that the market, it comes to this area, it sells, right? It comes into this area, it sells, right? It had a hard time. It bought back up into the area and then it sold. But now, what do we see happening at the bottom, right? We see the same exact thing that was happening at the top is now happening at the bottom. So what does this tell us about this market, right? If you guys know what the demand area is telling us about this current market, you can go ahead and drop that in the chat, right? And the correct answer is buying. If the supply is the sell zone, then the demand is going to be the buy zone. And the proper way to identify your supply or demand zone, you want to make sure that you get the most recent wicks entirely. You want your rectangle to cover the most recent wicks entirely. Now, you can use, sometimes only one candle will tap into this area and then the very next candle will take off. But I like to have additional confirmation. So I like to see that this area, right, has been tapped into at least 3 times. And we can even adjust our box over here just to make sure that we are capturing the bottom of the wick, right? And the reason why we want to do that is because if we study, right, the anatomy of a candle, we know that every candle is going to be telling us where buyers and sellers spent most of the time, right? So the length of the candle does matter, but that's going to tell us where the buyers and sellers spent most of their time. The bottom of the wick is going to tell us the lowest place that price went for that 4 hours. The top of the wick is going to tell us the highest place that price went for those 4 hours, right? So even up here, we can see price was high, right? And then we saw price was getting lower. The buyers and sellers, which is where they spent the majority of their time, they had a hard time getting price higher, letting us know that it was going to sell, right? So if we would have took this trade idea, if we would have set a sell limit, right, somewhere in this supply zone, we would have taken it all the way back down and potentially set our take profit in the, what we can see is the demand zone. So now let's just focus on what's currently happening. But before I move on, does that make sense? Can you guys see a clear area of support and resistance and a clear supply and demand area based on the candles tapping into that area and then going the other way? If it makes sense, you can drop a 7 in the chat, or you can do like Lisa said and just write makes sense, right? Because if you can see it, you can trade it. And sometimes you just have to strip it down to the bare bones, forget about the indicators, and focus on price action first. So let's say this was happening right now in real time, and we wanted to take this trade for a buy, but we wanted the market to first come back into this area and then buy potentially back up to the previous zone. And again, you can make sure you capture this entire wick from the previous candle and then the highest high. So you have a huge zone. So let's just say we were going to buy the middle of this buy, and this is a long position. When you're buying in the market, is considered going long. When you're selling in the market, is considered going short. And you can access that tool to help you calculate your pips and TP by coming to the left side of the screen. It's above this. This starts off as a paintbrush, but it says long position or short position. If it's buying, is long. If it's selling, is short. So I'm going to click that. I'm going to put it there. So when I'm doing buy limits, this gray line is where my entry would be, because remember, I want the market to come back down before it goes up. So my entry is going to be below where the current market is. Now, if you're doing a buy limit or a buy and you're using this tool, you want to set your stop loss just below the previous low. Right now, you can add a little bit. Sometimes I add 10 to 15 pips. Sometimes I'm a little off, but let's just say we put our stop loss there. and we're going to put our TP above the previous high, right? Because if the market is buying, it should be creating new highs. And we're going to see what happens. Is the market going to come back down to our entry? And I'll put a horizontal line so we can see if the market comes back and touches that line. Our hope is that it would go up simply based on supply and demand in a choppy market. Okay, and we see exactly what happened. On the very next candle, it tapped our entry. It's going up. It's coming down. Let's see if it's going to go back up. Well, nothing happened yet because this is where we are. But as we can see, we definitely would have been able to secure some pips in this trade. And if you're using supply and demand, you can, again, oh, it's still going. Oh, it tapped back into the area again. It finally broke, but that was hours later. So you would have been able to secure multiple pips in this trade. And I like to do 3 TPs, so I'll do one. I'll do one about midway, and then I'll do that. So you would have at least hit TP2 in the trade, even though the market was choppy. So if that makes sense, guys, drop a 7 in the chat. Then I'm going to add back the indicators to see if the indicators align with price action, because sometimes it doesn't always happen. And again, if it does not happen, just don't take the trade, right? And if you're not seeing what you want with your indicators, back it up and go to price action. If you're not seeing what you want in price action, go to your indicators. Use those two things together interchangeably and see what works. It's best when everything aligns, but the purpose of this is to show you that it won't always align. But if you're taking into consideration everything that's actually going on and not obsessing about what the indicators are telling you, you are better off, right? So let's go ahead and put our indicators back on and see how they could have led us astray in a trade like this. So let's delete these lines. Take this out of replay mode. And then we're going to back it up again. So now we're going to look at the same exact trade with the indicators and see how it could have been right or wrong based on what the indicators are telling us. So if we were, let me delete this too. So if we were to go by our confirmation checklist only and not paying attention to price action, not paying attention to supply and demand, we would have came and said, is our candle above or below our blue EMA? It's below. Is it above or below our purple EMA? It's below. Is our momentum line facing up or down? It's facing up, but it is negative. So far we have 3 selling confirmations. Is our stochastic positive or negative? Is our stochastic above or below 50? It's below 50. So if you were to take this trade for a sell, you probably will be looking at it like this. You will put your resistance here, right? Completely ignoring that this is a demand zone. You will put your resistance here. And if this is something that you've done in your trades, right, you've strictly gone by the confirmation checklist, you completely ignored price action, drop a 7 in the chat, right? If this looks like a trade or some type of analysis you would have done in the past based on your indicators alone. Stop loss above there. And we're going to see how this trade would have played out. And we already know it would have had stop loss. Let's just say we did 40 pips up, 40 pips down. We would have taken this trade. Your trade would have hit stop loss immediately, right? The trade would have hit stop loss immediately simply because we ignored the basis of price action. Now, eventually, right, if you set your alerts like I do, eventually this trade would have come down and hit TP, and you would have been like, wow, 8 days later, this trade hit TP. But it's simply because, 1, we were trading in a choppy market. 2, we relied strictly on our indicators and ignored price action. And 3, we just didn't really double check to see if this was a good trade or not, right? So if that made sense, guys, and you can still see how even with the indicators, this market is very choppy. And you can see how you could have made a mistake in that trade. Just go ahead and drop a 7, right? because this specific lesson is to really help you guys stop making the same mistakes and start being more profitable, right? Even if you're only risking 30 cents a day, right, or 50 cents a day, you could be making $10 to $20 a day, minimum of $100 a week, minimum of $400 a month, and that is enough to pay a bill, right? Lisa, you said you have a question. You should be able to unmute yourself if you need to, or you can type it in the chat. 1 second. Okay, you can go now.
I'm going to unmute myself. Hello, everyone. So do we check price action, or do we check the indicators, or do we check both?
I would say, no, it makes sense. I would definitely say check both, but starting with price action would just make more sense because the wicks are the indicators are only confirming what you're seeing with the price anyway. So I would definitely say check both. So if you were to come, and in the way that you can do it by checking price action is just really pay attention to the wicks. Like you'll notice whenever the wicks start acting up, is literally having a hard time getting any lower. So you probably should be looking for a buy around here, right? Even though the indicators may not indicate buy yet, we have a candle pattern right here, right? Because these candles are twins, so we know it's going to go up. Plus, we have the price action here. So even if we took our indicators off, we should still, you're going to see the price action regardless. Indicators it's all really objective because everybody uses different indicators. So whenever you start seeing wicks at the bottom, okay, that's buy. And if you see your indicators align, super buy. But if the indicators don't align, I would say go with the price action first.
Thank you.
You're welcome. And again, just taking the indicators off again, we see this price action up here at the top. This is no indicators. We see it wicked in. We see it wicked in. We see it wicked in, right? If you have really 2 to 3, but I like to see 3, then you know that, okay, a reversal is coming. And if we add our indicators back, we can see if this would have aligned with everything. Sometimes it does. Sometimes it doesn't. Well, we have some reversal confirmations here. We got the wicks at the top. We have the momentum crossing. Let me actually put it in replay mode so we can see if it happened on that candle. Second, y'all. I think it was here. I'm not sure where it is, but always, once you identify what the wicks are doing, then you can go back and count your indicators to see if it makes sense. Because once the candle crosses, say for example, if you were looking here, I just gotta remember where it is, y'all. I'm gonna back it up again. Say for example, if we were looking here, and we're gonna put a line, we're gonna put a rectangle here. If we came into the market at this time, the first thing we're going to notice is that there's 2 wicks that have already rejected from the same area. Already, this is looking like price is struggling to get higher. And if we take this box across, we can see even more times where the market hit this area and then sold. So that's the first thing we would notice. Now, even though the candles are above the EMAs, you can still go through the confirmation questions that you have or add additional ones. So if the first question is, are the candles above or below the EMA? They're above both the blue and the purple EMA. So those would be bullish confirmations. But then you can ask yourself, is the candle near a supply or demand zone? It's near a supply zone. And that's going to trump a lot. So that would be primary. You could ask yourself, is your momentum facing up or down? It's still facing down and it's still positive, but your stochastic is also facing down and the orange is also over the blue. So if you still have your selling indicators plus the market being in a certain area, then you can feel confident to still take the trade for whichever direction is going in. But that's something that we got to start to pay more attention to, is those wicks. So again, I'm just going to turn off all my indicators again, all the indicators and drawings. And I just like to scroll on the screen so that you guys can start to easily identify areas of support and resistance, right? And if by like what you know now about supply and demand, are you going to feel more confident to get into your trades for either a buy or a sell? You can just drop a 7 in the chat, right? I want you guys to really pay attention to the wicks. And the longer the wicks, the better, right? I know sometimes the short wicks can be confusing, but don't let it confuse you, because if we just literally look at this area right here, the market has a hard time getting down. So eventually it's going to come back into this zone and it's going to go up. Like, it's literally easier actually to look out without your indicators, right? Because you can see when the market is having a hard time going up or when the market is having a hard time going down. So here's another sketchy setup, right? Let's just say we came to the market at this time, right? And you potentially thought, because I'm seeing this here, that the market is going to buy. Now, this will be a time where let's add back the indicators and see what make more sense, right? You have to look at everything collectively. What makes more sense? Wait, sorry, that's not the right place. 1 second, y'all. It took me to a different part of the chart, but I think it was here, right? I think it was here. Now, when we come here and we have the indicators on, we can see that the candles have crossed below the purple EMA, right? So that's a sell confirmation. We can see structure has been broken. The market was doing this thing right here. Structure has been broken on the downside, selling confirmation. We can see our momentum is facing down and negative. Well, I have to rewind, but y'all will see it's facing down and negative. Plus, our stochastic is also facing down and below 50 on this particular candle. So although this would be considered a little sketchy because it's consolidating, we do have a lot of those bearish confirmations, again, like the cross below the blue EMA, the cross below the purple EMA, the break of structure, facing down, facing down. Is this making sense, y'all? And helping y'all see more clearly what to do and what not to do? Y'all can just write yes or no. Okay, thank you. Lisa says it's making sense, right? It's making sense. So I'm just going to look at another pair because the pairs, they don't always do what we need them to do. Sometimes they do, which is amazing, and a lot of the times they don't. But I don't encourage y'all to trade noisy, consolidated markets, but sometimes you just find yourself, it's your time to trade. You want to trade that day and time, and you're going to get through it. Like, I know some of us just can't take a break, right? So here's another example, right? We see all the wicks tapping in, 1, 2. We set our buy limit down here. Market takes off. That's awesome, right? We see up here, it only happened one time. It came up, went down, right? Let's see if we can find something else that's sketchy and what will help us make the best decision. And you guys can also drop in the chat any things that you still struggle with as a trader, and I'll make sure I will cover that also. Here's another one. Anytime you see consolidation, just pay attention to what's happening. Other things that you really can start to pay attention to are the crossing of the EMAs, right? Are the crossing of the EMAs. That's another thing that you could pay more attention to. Usually when the blue crosses above the purple, or your 50 EMA crosses above the 200, that's selling. When the 200 crosses above the 50, that's selling. So that's purple over blue. And when the 50 crosses over the 200, that's buying. So we can look here. We can see that there was some support here, but we can, and this is super sketchy because it's below both the EMAs. This is facing up, but it's negative. This is facing up, but it's negative. And you know, whenever the stochastics cross back up into the blue zone, right? The market could be going for a buy, but we have to also remember what these stochastics are doing. So although it may go back up to here, ultimately this market might want to be selling because of what the EMAs are doing, right? So that's another small thing to consider. And we can see what we would have done in this trade. For my people who trade reversals, they would have gotten in for a buy. They would have set their TP here, and they would have set their stop loss equally low. And then my people who would have gotten for a sell would have set a pending order here. Their stop loss would have been there, and a TP would have been down here. And we just want to see which side would have been right, the buyers or the sellers, based on we have a potential bounce back right here, but then we have alleged resistance right here, and then we have the EMAs about to cross here. So, and then we see the purple crosses over the blue. The blues crossed over the purple, and this market is sketchy. But pay attention to the EMAs and what the market is actually doing. Yep, in this case, the sellers definitely would have taken it simply because, and we're going to delete the buying one. The sellers would have taken this trade, right? Simply because the market decided that once the EMAs kept crisscrossing, it finally decided here, right? We see it was a little intertwined here. Once it finally decided, the market actually decided to sell. So that's another small thing that you could pay attention to. Are my EMAs about to cross, or are they further apart, right? Because the further the EMAs are apart, if you're using two EMAs, the stronger the trend. The closer the EMAs are, the weaker the trend. And again, I can just zoom out so that we can see that. We can see that the EMAs, whenever they're really close together, the market's consolidating. We can see that the EMAs are far apart right here, right? And then this selling trend is kind of like a Ichimoku cloud. If you ever use that indicator, it's far apart. We can see it selling there. It's close together, consolidation. I don't know why the chart's stopping right there. Okay, we can see the EMAs are far apart, and we can see this market has been selling for a very long time, right? So pay attention to that. Also pay attention to, and this is going to be important too, pay attention to where your stochastic is. And I'm going to turn off these other indicators so we can focus on the stochastic for a second. And again, these are just all tips and more things to consider when you are trading. So if your stochastic, and actually basically any indicator, if your stochastic is crossing back up, because when it's in this white area, it's bound to reverse sooner or later. But once it actually crosses back up, that is when you know that the reversal has started. And we can see that here. Actually, we can see the demand area here. The market came into this area, and then it came into this area again. Simultaneously, the stochastic was also crossing back up. The market was going up. Same thing with this. We see a demand area. We see the stochastic crossing back up into the blue zone. We see the market going up. And I'll highlight some sell examples too, because again, these are all small things, especially if you are practicing reversals or it's just starting to make sense to you. We have a supply zone here, right? We have a break of structure. The market was structured. Then it broke structure on the downside. Simultaneously, the stochastic was crossing back into the blue zone, right? So pay attention to where your stochastic is, because if you're looking at, let's just say, a sketchy market, let's just say you were looking at this. You came into the market at this time. One second, y'all. We gotta find a section again. All right, I'm gonna just use this section right here. So let's just say you came into the market at this time and you were confused whether you should sell here or you should buy here. Simply because you feel like, first of all, you shouldn't trade this because it's just, if it's that confusing, just don't do it. But you have your area tapping, the market tapping here, and then we have the market also tapping here. So you're like, should I buy or should I sell this? We could look at the stochastic and we can see that the stochastic is facing down. It's below 50 and the orange is still over the blue. So if we wanted to take this for a short position, it will look something like this. Hold on, guys. It's not playing. Oh, there we go. Okay, we can see that the market actually did do that short position, but then it actually quickly turned around and it went for a buy. Now, if we were paying attention to what was happening with our stochastic, we can see that although it started to face down, the blue crossed back up above the orange, and then it started to go back up. So even though the stochastic may seem like it's a lagging indicator, again, it still will tell you a lot about the price. But if you want to focus on reversals, the safest thing to do is wait for something like this. Wait for the cross up so that you can know that it's time to buy, or wait for the cross down. Trying to circle it. Even here, this was a little sketchy, right? This was sketchy, but we can see the stochastic actually cross back down. And even though it was consolidating for some hours, it actually did decide to sell. And the signal was when the stochastic crossed. Again, we have the cross up. We see the buy, cross down, sell. So yeah, it's really just a bunch of these little things that you can start to put together and do more. If the market is too choppy, don't really be intimidated by it. If you still feel like you need to trade, then just start to really look at the additional details. Start to look at your EMAs, start to look at your price action a little bit closer. Start to look at if your stochastic has crossed or is it about to cross. Start to look at these wicks. And if it's too wicky, as we can see, this market looks crazy. It's very wicky. You can look at something else, and I'm just going to click on something else so you can see how you should be able to easily identify a market that's tradable and a market that is not tradable, but you should still know how to navigate both. Yeah, all these markets have been consolidating for some time. All right, so Euro USD is clearly more selling than consolidating. It's not as choppy. If you are looking at this market for a sell, this week, you can look right here and say that, okay, I can see that the market has already tapped into this area. And I can clearly see that it's more of a down shape than a crazy sideways shape like the markets that we've just seen. If we look at NZD USD, and we can look at this on a hour time frame too. NZD USD seems to be going up more than anything. So looking at price action, the other indicators is we just got to look and see. If it's too choppy, you can't tell right away, then start going into your confirmations. GBP USD, it's been mainly going up. I see more green candles than red candles. We can look at our indicators. I see my stochastic is still facing up, right? Turn on your momentum is facing up and positive, right? So yeah, that's really all for today, guys. I want everybody to be less confused. I want everybody to trade with less fear. I want you to be able to come in here and really figure out, okay, what is it that I'm looking at without getting scared to take the trade. And one last tip I'll give you is you can use my strategy. You can use your strategy. TradingView has built-in strategies. Sometimes I switch back and forth just to get additional confirmations. So if you do have all the indicators that you like on your chart, you click this little box here and you click Save Indicator Template. You can save it as whatever you want. I'm going to just save this, for example, as Cha-Cha Strategy 3. So this is my primary strategy that I'm using. But sometimes when I want to double check my confirmations, I'll click the box and I'll go down here and I'll choose one of TradingView's built-in strategies. And the one I like to simply use is the displaced EMA. Because I know just looking at this strategy, once the candles have crossed below the EMA, I'm selling. And once the candles has crossed above, I'm buying. So I'll just show you, like, say, for example, this is a cross up right here. And then the market went up. And then this was a cross down right here. The market crossed here and then it sold. So this is the displaced EMA strategy. That's how I would use to enter. And I could just simply double check it with my strategy and see if I'm getting the same confirmation. So here I would say, okay, I do see the support here. I would probably have waited a little bit longer on my strategy until it crossed above this EMA. And I probably would have waited a longer here until it crossed below this EMA. So I just like to double check it on other strategies just to see, are my confirmations valid or not? Here, same thing. Once the candles are above the EMAs, I buy. Once they're below, I sell. If I see candles in between the EMAs, I don't take trades. I just wait. So that's just the last tip I'll give, is that y'all can cross-check your strategy with my strategy, with the TradingView strategies, to see if it's really as clear as you think it is. Mixed with price action, I feel like everybody should walk away being a much better trader after today. So if you guys have any last minute questions, thank you, Lisa. I'm happy it was helpful. If you guys have any last minute questions, you can just drop them in the chat and I will answer them. And then I do just want to show you guys the challenge for the week, because we do challenges every week. Haven't had one in, well, we did have one. I just didn't announce the submission on Friday, but we are going to be playing bingo this week. So if you want to play the bingo, you know it's going to be 15 points. It's going to be 15 points. And here are some things that you can do on the bingo. So share an idea in the Telegram chat, have a trade hit TP2 for 80 points, enter a trade for a buy, go undefeated, enter an AUD trade. So yeah, gold trade, BTC. So it should be really fun. It should definitely push you guys outside of your comfort zone for trading. And then of course I will drop the formal rules and the prizes in the chat tonight, and I'll drop the video tomorrow. But that's all I have for you guys today.